Hi, and welcome to another daily recap. So today I'm going to recap day 117, and it's October 17, 2024, Thursday. So today I didn't get any trades on both EU as well as on GU, and today is going to be very short video because of this all this heavy high impact news. Price was consolidating in during London and during New York. Price rapidly went up and down. So I didn't get any trades on this day. So anyway, let me discuss what happened on this day, how I analyzed the market, and why I didn't take any trades on this day. So starting with the euro dollar, the daily is the swing structure in the daily is bullish and the internal is bearish, and price is almost mitigated this daily demand. So I can just continue to look to follow this bearish momentum till the price mitigates the daily demand. And once the price mitigates the daily demand, I can't say that immediately there will be a shift in the order flow and there will be a bullish momentum. The first the supply will get diminished and then slowly the demand will take control and then I can look to take longs if there is sufficient confirmation in the lower time frames. So currently, there is no sign of bullish order flow shift in this week. Thus, I can look to follow the bearish momentum till there is a strong bullish shift in the order flow after mitigating the daily demand. But I need a strong confirmation for taking longs. Thus, for now, I'll follow the bearish momentum till the price makes significant bullish order flow. Very simple. See, the bias is bearish. Moving on to the 4-hour chart. Again, the swing structure is bearish, internal is bearish. So let me zoom in. So here you can see the fractal order flow is also bearish. For longs, I must see that the price mitigate the daily demand first and then chalk bullish before taking longs. So that would be the high probability case for taking longs. But for now, looking for shorts is valid, especially from this POI. I know this is a very short, nothing POI, but still it has swept liquidity and it has some displacement. So I can look for shorts using this POI till the price reaches the daily demand. And not only that, price can penetrate deep into the daily demand. So there is a ton of risk to reward that I can look to target. The supply chain is getting respected, thus I can look for shorts following the supply till the price mitigates the daily demand. So the 4-hour bias is also bearish because of supply chain respect. This is H1. So here you can see the swing structure is bearish, internal is also bearish. This becomes the strong internal high because of the high time frame support. I made this as a strong internal high. Not only that, it has swept some low time frame for buy side liquidity and it has made a strong push down and it also made a market transition. So there is no point in not considering this as a strong high. And this is my POI because this is mitigated. So this is the POI which I can look to trade shorts from. Otherwise, I can also, you know, this could be an inducement, and the price can go up. Take this buy sell liquidity, chalk down, chalk bearish. Then I can look to target this fresh POI, and then enter from this fresh supply zone, target the weak internal. So that could be another trading opportunity. But for now, I'll just be, waiting for the good confirmation for shorts. And for longs, I must see the price mitigate the daily demand and then chalk bullish. And once the price chalks bullish, I can look to play the internal pullback, or I can also call this as phase D longs because for phase D, one of the first confirmation that I must have is price mitigating a high time frame POI. Here you can see that the price has mitigated the high time frame POI. And if I get additional confirmations like resting liquidity to be targeted, so that would be a good phase D longs. But for now, I'm not expecting anything. I'm just playing with the price action. And yeah, actually, uh, price went up, took the uh, buy side liquidity, not only above this Asian high, but also above this strong high. And yeah, there is a reason for mentioning this as a strong high. That's why price didn't close above this one, and price, decided to continue with its bearish order flow and mitigated the daily demand. Yeah, and yeah, there is chalk bearish, but yeah, I can't expect the price to come here. Even if it comes there, I can't take phase A shorts because price is already it is coming off from a high time frame POI. So the only thing that I can do now is wait for the price to chalk bullish, and then I can look for longs, playing the phase D shorts, and that is internal pullback or swing pullback, anything you can call it. So that is the story for tomorrow, and it's already time. It's already 12:15, and this is the last candle that is getting printed. So even if this gets printed, I would not get any trades because it can't make the chalk right. So maybe tomorrow there could be a bullish chalk where I can look for longs and play the swing pullback or the internal pullback, whichever plays out, and that would be face the long. But for now, there is no trades on EU on this day. So jumping into GU, so GU would be somewhat long analysis because it was not impacted by the high impact news that much. So jumping into GU, so the daily swing structure is bullish, internal is bullish, and price actually chopped. I mean, high was bearish. So this is cool. So this is strong. Actually, this is not bullish. This is bearish, and this is strong. And price has made and bearish high was here. So this is the high probability supply from which the price can react and continue pushing down till the price reaches some significant demand to the left. And there is nothing here. So all the price can just rally down till it reaches this demand. So until then, price can just make a small pullback, mitigate the daily supply, and then it can continue to push down. So this would be my area of, I mean, my high time frame POI. If the price reaches that POI, I would be not looking for longs. I would be ready to look for shorts. Here you can see now the daily bias is bearish because of bearish order flow and buy side liquidity sweep and sell side liquidity to target. So this supply is formed via strong liquidation. This is more likely to be an institutional supply, and there is a lot of chance that the price would engineer buy side liquidity to push further down. And yeah, one more thing is here. One more thing is that this is a straight push, right? So there is no liquidity, and the only liquidity available would be the buy sell liquidity above this high. But since this is an institutional supply, so most probably price would consolidate around here, engineer buy sell liquidity, take them out, and then push down. So that can happen. So I can expect some kind of consolidation, but with the current high impact news on the queue on today, that would be an interesting day. So this is the 4-hour chart where you can see the 4-hour as swing bearish. And after swing bearish, we can expect swing pullback. So let's zoom in and see what the 4-hour. Let me gather some more information from the 4-hour chart. If fractal order flow is bearish, I can look to play longs only when the 4-hour chop bullish. Currently, I can look to target the 4-hour fractal low. This is the current target. So if the price reaches this 4-hour sell side liquidity, then my buyers could shift, and depending upon the medium time frame order flow, I can shift my buyers and take trades accordingly. Because once the price takes this sell side liquidity, it will obviously target some high time frame buy side liquidity. So I can't keep playing shorts, since there I mean I can't keep playing shorts, forever and ever. I must be conscious and make alert moves after the price has taken the sell side liquidity. But before this, we are having a clear drawn liquidity, so I can look to target the sell side liquidity. So looking to target the 4-hour sell side liquidity is only possible if there is a deeper internal pullback towards the H1 POI and the price chop bearish. Even if the price moves up, then I can say that the high is weak and it failed to take out the low, and I could look for longs targeting the weak. So what I'm trying to say is, see, the this high actually failed to take out this low because it's just a liquidity sweep and this is not a closure below. If the price comes down, takes out this sell side liquidity, so obviously I would be looking for price to chop bullish, and I can look for longs. But currently the bias is bearish and I can look to target the fractal low. It is not possible. That is only possible if the price goes deeper into makes a deeper pullback, takes some buy side liquidity, chops bearish, and then I can look for shorts. Till even then, there is one risk factor. What's the risk factor? Even if the price chops bearish, I can say that this chop is an fake chop because this high failed to take out this low. So price would definitely go up to take out this high. During this process, price can make some fake chops to induce some buy side liquidities, and then it can start to push up. I know it's a bit complicated. You can just move backwards and then listen to it again if you're not able to understand it clearly. But yeah, this is the concept. So there is kind of a mixed signal, but I'm happy to take shots if the price chops bearish. I know with the risk factor in mind, because I must know why I lost the trade, right? Yeah, for longs, I need to see the price take out the 4-hour sell side liquidity. This is the sell side liquidity. Sorry, this is the sell side liquidity, and then chalk bullish to play the internal pullback. Once it's taken, I must see some chalk bullish, and I can play internal pullback or the face the longs. This would be a medium probability because price is not reacting off from any high time frame POI. So at 9:18, price actually took the 4-hour sell side liquidity and it's chalk bearish. Now it's high probability trade because you can see the rejection, and this is a very high probability POI. So I can look to target I mean, I can look for the price to mitigate this POI, low time frame entry, and then boom, we are having a clear foresight or 4 hour buy side liquidity to target. Everything is aligned. All I must get is a good low time frame entry. But fortunately, I didn't get any trades to target the KCNO, but it's I can target in my TP2, which is the 4 hour buy side liquidity above here, because I can expect the price to make a pullback to mitigate into this daily supply. Right? We said this already because there is a supply above. That's why uh, it is neutral because of bearish order flow and the sell side liquidities because of the bearish order flow. This is a bearish bias, and for bullish bias we are having sell side liquidity sweep and the supply above. Price has struck a strong daily sell side liquidity, and we can expect the price to push up. Again, in the low time frames, there is a strong sell side liquidity sweep with SMT, with a bullish SMT. So all these confluences are adding up, and I can look to target the 4 hour buy side liquidity, that is the H1 strong internal high. I can confidently target the strong internal high because both the high time frame as well as the lower time frames are telling me to go for long. And one more thing is that this is a beautiful POI from which I can take longs. So this is phase D, price tapping into the high time frame POI. No, but price took the sell side liquidity, high time frame sell side liquidity. So I didn't mention this in this condition, but that can be an alternate for this rule. High time frame supporting medium time frame area, definitely. High time frame, the score of 4 by 8. This is also ticked because you can see it has 6 out of 8 criteria met. And what are the other confluences? It has struck the Asian lows, and there is a time based liquidity to target. What is the New York high? And it has also structural liquidity to target. That is the 4 hour buy side liquidity. It has swept the previous day's low, and it has positive SMT with the XY. And one more thing is that the London low, sorry, London can form the low of the day. So a lot of confluences are adding up. So what is the risk factor? It is counter internal. The target daily supply is partially mitigated. And one more thing is that uh, what I said was price can go up to mitigate the daily supply, right? But it has been partially mitigated by this candle. So this could be the mitigation and the push down probably. If that's the case, this would be the POI. This can hold and it can push the price down. So what I can do is if the price pushed back, I can look to target the low time frame entries here, and this would be my break even point. Because once the price reaches this POI, price can either react from this and push the price down if this mitigation is valid, or price can either flip this up and then go further up if this mitigation is not enough for the price. Does not have a convincing liquidity to target. Yeah, there is New York high, but it is also a strong internal high. So there is a mixed confusion between whether it's a liquidity pool or it's a strong high. So entry method is and one more thing is there is no entry method, so only way that I can enter this long is either with M15 LC2A or LC2B or the M15 confirmation entry. And adding to the risk factors, there is a low resistance liquidity being formed here, so price can here just push down, take this low resistance liquidity and invalidate this POI. So positive confluences is also there, negatives is also there. Like trading is all about taking risk, right? So I can just take the risk, but here you can see price came down. I can say this as some kind of low time frame lead, but I can't take trade with this 30 pip stop loss. That's why I just avoided the trade. So there is no LC2A or LC2B. You can't say that there is no uh, there is pullback. There is no LC2A. The only way that I could enter was using this low time frame lead, and there is no uh, confirmation entry. I know that there is a pullback. This was around 1211. So even if this is the last candle being printed, even if this candle completes printing and chalks bullish, even then I can't take the trade because once the candle finishes printing, that would be my end of the trading session. So it is what it is. It I could have taken a kind of risk entry where I can place a limit order here, stop loss just below, but that would be a very large stop loss. And I don't know where the price can go. I don't know whether the price will take out this high or not. All I know is once the price pulls back, it can go up and it can take out this high. But apart from this, the market is unpredictable. So I'm not interested in taking risk entries with large stop loss. They can have a tighter stop loss and quick in and out, but larger stop loss I'm not interested. So actually, I know that today there was a news. So I should have completely avoided this trading day because during news, obviously, there would be consolidation during London and massive expansion in New York without any trading opportunities. So that happened time and time again. But still, I just want to have a look on this trading session. What will happen? Suppose if there is a clean setup, and if I suppose place the trade, sometimes when the news plays out in my direction, my TP would be quickly hit, and not o- not only that, not only the TP would be hit quickly. Suppose if there is a slippage, I would get more than what I intended. That's utterly possible during news trading. So yeah, to summarize today, I didn't get any trade on both EU as well as EU, mainly because there was high impact news on the queue on this day. So yeah, see you on next day, that is October 18, 2024, Friday. Until then, cheers guys, bye.